Hello, Sonoma County. Welcome back to our channel. Have you heard the good news that the Fed has officially lowered the rate? It's supposed to be really good news, and if you've turned on any news channels or social media, I'm sure you've seen it all over the place, but what does this really mean, and how does that affect the Sonoma County real estate market? We'll get into that in just a second, but first, I'm Morgan DeVincenzi with Sullivan Group Real Estate, and we help people move into, out of, and all around Sonoma County every single year. So if you are thinking about making a move, trying to figure out when is the right time, how is this going to be affordable, what's going on in the economy to make sure this is the right decision, you'll want to watch this video and you'll want to reach out. Information's here on the screen. Happy to chat through your specific scenario and what's going on in our real estate market here in Sonoma County to make sure it really is the right move for you. Let's dive into this in a little bit more of a high-level sense, and then we'll get a little more nitty-gritty into what this means for Sonoma County in just a moment. So in mid-September, the Federal Reserve got together, they addressed what was going on in our economy, and ultimately decided to lower the interest rate by 0.5 point. Now, what does this really mean? This does not directly affect the mortgage rates yet, but we will see those benefits soon. What was happening initially was throughout the pandemic and over the last 4 years, the rate has been increased every time the Feds met. This is the first decrease in about 4 years, which is a great sign that things are finally moving forward and gonna lighten up a little bit here in the consumer market when it comes to borrowing and spending money. They're trying to battle the current economics, the high cost of goods, inflation, and so many other factors by making this move. Really, the goal with this 0.5 point decrease is to stimulate the economic growth and also benefit borrowing costs. So how does this actually impact the mortgage rates? As I mentioned before, this is not a linear direct effect to a decrease in mortgage rates overnight, although I think that's what a lot of people were hoping, and some of the things you're even reading online might indicate that could be the case. This happened a couple of weeks ago, and we still haven't seen that quick jump in lowering rates because ultimately we knew based on economic factors and what was happening in the Fed's conversations leading up to this meeting in mid-September that they were likely going to lower the rate by 0.5 point. So leading up to this, there was some anticipating movement in mortgage rates already. Just from mid to late summer to mid-September, we saw a nice decrease in interest rates of over a full percent. We were up over 7%, and for a moment there, we were into the high 5s. So we saw a nice decrease, and we're still in a much lower rate than we were at some of the points earlier this summer, which is already helping stimulate the real estate market. But don't worry, this kind of sounds like I'm almost saying that the rates won't come down any further. It just doesn't happen automatically. It's kind of a trickle effect that they have to lower the rates initially. It affects the next thing, that affects the next thing, that affects then mortgage rate. And there's going to be more decreases anticipated in the future. In fact, the Fed is meeting again in early November. I believe it's the day after the election, so lots happening. And it's anticipated that the Feds are going to lower the rates one more time before the end of the year, which hopefully will then bring us to a great starting point for 2025. Okay, so of course, how does this even affect then the real estate industry? It affects it in a few different ways. For buyers, for sellers, for investors, and for, of course, the real estate professionals, of course, as well. For buyers, lower interest rates simply means more affordability. We get to help buyers improve their purchase price because here's a quick rule of thumb. If you're looking at a home in your price range and the interest rates are about 7%, we'll use realistic numbers for what's been going on this year, and interest rates are about 7%, let's say you were pre-approved to $600,000. Okay, that's great. Well, if interest rates come down by about 1%, that increases your purchase power as a buyer by about 10%. So again, the first scenario, we were looking at 7% interest rates, pre-approved for a $600,000 purchase. Well, if interest rates come down from 7% to 6%, your purchase power goes up by 10% from the $600,000, and now you're looking at a $660-ish thousand purchase while keeping your monthly payment the same. Imagine how that can really impact a lot of borrowers to get more of the house that they're looking for their future needs, for their family, for their lifestyle, without absolutely breaking the bank. And of course, if interest rates come down more than 1%, you can see how it really starts to affect the buying power for buyers. Of course, for sellers, we see a lot of benefits as well. First and foremost, oftentimes sellers who sell a home often have to also purchase a home. So it helps them on the buy side just like it would any other buyer. But as a seller, the lower interest rates are, the more interested buyers are in making a purchase. Therefore, demand goes up. You're often to have more buyers coming through your door, busier open houses, more interested parties leading to hopefully multiple offers. You get to select the right offer from the very beginning that suits your needs at the best price and best timeline possible. Multiple offers really are a dream come true for sellers, and when interest rates are lower, there's a better opportunity that that's going to be the case. And for you investors out there, or soon-to-be investors out there, watching this video trying to figure out would it make sense to invest in real estate here in Sonoma County? Well, absolutely yes. We have annual appreciation about 5 to 8% every year, so that is a increasing value on your asset just for owning it. Plus you're paying down a mortgage, maybe you have tenants making that mortgage payment for you. But as interest rates lower as well, we see investors financing coming at a better price. Therefore, you have a higher profit margin when it comes to bringing the tenants in or flipping and selling that purchase in the future for a profit. Coming towards the end of 2024, it is, quite frank, a weird year. We've had high interest rates, they're coming down, we have an election coming up, the Feds are meeting again right after the election. We'll see how this all affects the real estate market. And really, the real estate market is very dependent on what's going on in the economy as a whole and what the Fed thinks needs to happen for the economy to move forward. And they'll make their decisions for the whole big picture that also affects just our small, not so small really, industry of real estate and the market for all buyers and sellers. All in all, this Fed cut is a great sign that maybe there's a light at the end of the tunnel and things are just gonna get a little bit better. And that really is the anticipation with all of the market experts we know locally as well as nationwide. So if you're thinking about making that purchase or making a move, listing your house, are there enough buyers out there? Likely there's only going to be more and more buyers as we move forward and the Feds continue to lower the interest rate little by little. So depending on what your plan is, it could be beneficial to wait, but likely it's most beneficial to start the conversation now, gauge what your goals are and how to find that right timing for your specific scenario and enter in your new chapter in a new home. Of course, we'd love to help. So information back here on the screen. Absolutely reach out. We can schedule a phone call or hop on a Zoom, or even better yet, come into our office here in Santa Rosa and we'd love to meet and chat about what that might look like. Thank you so much for watching this video. We always love reporting on all things Sonoma County and Sonoma County real estate. This one's beyond Sonoma County, but of course it affects our home sweet home here as well. If you like this video, go ahead and click the like button, drop a comment down below. Have you been reading articles? Is what I'm saying aligning with what you're reading? Was this helpful? We'd love to hear it. And don't forget to hit the bell and tap subscribe so you'll be notified when we release more helpful information about all things Sonoma County and Sonoma County real estate. We'll see you soon. Thanks.